Hey, welcome back YouTube family. We are back with another day trading recap video. Today I'm going to go over a pre-market strategy that I've been trying out just to try to hone in and get my levels and my volume levels right before I start trading this too much with real money. I have traded it in the sim as well in the past with my real live account. So I am fairly familiar with it. It's really easy, not a lot of indicators, not a lot of setup. Really, you're just looking for volume to match up with certain moving averages. So we're going to go over a few trades that I took this morning and see what I was looking for, and maybe give you some ideas if you're looking to trade pre-market, or if you're like me and one of those people that really have very small amounts of time to trade during the day, and pre-market and at the bell really is your only option. So that's one of the reasons I wanted to throw this video together real quick. I appreciate you guys coming by as always. If you do like the content, please feel free to always subscribe and check out some of my other videos. And also go ahead and hit that thumbs up button if you don't mind. Okay guys, let's jump over to the charts. Okay guys, here we are on NTRB. This is the stock that I traded this morning. And obviously it has one of the requirements for me to trade pre-market. There are a lot of stocks that show up on gappers in the morning, like most folks have something that's gapped up maybe 3%, 5%. They have a certain float, maybe a certain true range, a volume range, something like that. Really what I'm looking for in the mornings is I'm looking for either a really large gap up, large gap down, and the price range really needs to be right at the double digits, if not close. And I mean, if it's not in the double digits, then it needs to be really close, like $8 or $9. I'm not really looking to trade this strategy with anything that's like $3 or $4. That's just too cheap for me, and I don't like movement. Also, the stock doesn't need to be too expensive. For instance, last week there was a stock that gapped up. I believe it was from like 15. Was it CCXI that gapped up into the 30s? I believe that was it, and I actually traded it, but the spread was so large in pre-market that it would go from being a 5-cent spread to a 40 to 50-cent spread in pre-market. This made it extremely difficult to trade pre-market and moving averages because I would get an entry that wasn't even on the candle that I was looking at. So you really want to find a stock that falls in between, hopefully the $9 to $10 range to around the $20 to $25 range at most. Secondly, you do want to see some volume, but we'll go over that. So right now we're going to look at this, how this stock was a gap up and how this fulfilled rule number 1. Okay guys, this morning on NTRB, I was already looking at stocks, trying to find something to trade pre-market. And this one actually wasn't on the scanner yet. We had TARA, which was on the scanner, and I was looking at that, and there was another one, I can't remember the exact name of it, but I was looking at that one as well. And I actually think I did trade this strategy on it, but only like one time. I may pull that up if I can find it after this, but I don't think I really had any great entries there. On this stock though, what I really did look at was we had this incredible amount of upward volume on a catalyst. So this stock had sat at, and again, we're not looking at dailies on this. We do want to look at the daily to see if it pulled back, what had happened if it's a, if it's a former runner that ran up to 9 and it fell back to 7 or 8, and did that multiple times. We of course want to take that into account and see where those pops went up to. But I'm not really looking for daily chart action when I'm trading this strategy, because I'm not really looking to trade this all day long. Like I said, this is a pre-market strategy. I'm looking to trade off of initial news volume, maybe some people taking their profits, or maybe some people trying to get in before the stock runs up, which is what happened on this stock. As you can see, around 7:30 we had a little bit of volume here, and then around 8 a.m. we had this our normal market volume right around this general area right here. And then as I was still trading another stock, this bad boy went above the VWAP, and that's when the real volume just started to pour in. As you can see, these green candles right here just start amassing and pushing their way higher. This would have been the perfect entry for this strategy, and I want to show you exactly what where my entries would have been if I would have been actually watching this stock at this time. What we're looking for is we're looking for a confirmation above the 20 moving average here. Now, the 9 moving average is respected in that, honestly, I kind of use that for stop loss depending on the way it's moving. If we're having a lot of ascending momentum, then, I'm going to respect the 20 a little bit more. But if we start going sideways, then that's where I'm going to start looking at the 9 and say, okay, if I see something close below that, then that's where I'm going to want to go ahead and be prepared to stop out at least, or maybe pull some shares out if you're already sitting in a profit. So our confirmation would have been right here on this moving average right here. So once this stock confirmed above the 20 EMA with volume, now we don't want to see just dead volume here. As you can see, you're like, well, why didn't you say these candles beforehand? Well, the biggest reason is look at this volume. There's nothing here. Plus, it's not going to be on the gap list yet. Now, if it is on the gap list where it ran up and then pulled back down, that's okay. And again, this is where it's initially going to show up on the chart, pull back, and then make some movement. But unless you're staring at the stock and ready to switch over right there, then you're more than likely going to miss this initial move. So normally what I see where I have to get in is where we have confirmation with strong bullish movement that pushes the stock over the 20 EMA. Excuse me. Once this did happen here, and it did happen around 7:55 before the 8, but this right here would have been my ideal, and it's not because of this. It's really just because of the time, which kind of leads us into the second part of this setup. I don't really like trading around again, I'm not trading at 7 o'clock in the morning. I'm still going through my morning routine. Trading at 8 o'clock, I'm not a big fan of it. So that's the other reason why, even though this was a good setup, if you would have had this stock on your watch list, you're looking at getting into a stock 2 minutes before the 8 o'clock traffic comes in. And me personally, I'm not a fan of that. We know how the market orders start feeling, and again, if you have any kind of snafus with the L2, it's going to be tough to see where these are actually feeling. We know these long wicks really aren't anything except for market orders and stuff trying to fill and bring everything to order, but too much volatility there. My idea for this is to let the 8 o'clock traffic shake out, which we see, which is exactly what it did. It shook out for a good 5 to 6 minutes, and then it pulled down below the 20. So this right here, and let me grab my my arrow here. This right here showed me, it was basically the confirmation I was looking for. Now, the other good thing about this, and as you see, it would have came back, and if you would have taken this short for the loss of the 20, you would have had a perfect stop loss level of $8. And if I would have been watching this, I probably would have taken this short right at this level once we had this confirmation. It would have been on crappy volume. So there again, unless I was watching the L2, I probably wouldn't have taken it. But just by going by the charts, that is what I'm looking for. So the real catalyst we saw here is right around 8:12, 8:13 is when these green candles started filling up at the bottom of the screen, and that's when we had the initial volume pushing this back up and then getting to the 20. Now, the chances of you actually getting in right here at the bottom of this candle are slim to none. Like I said, unless you are some kind of magician and you know the stock is going to run, maybe it was on some kind of list that you knew about, or you have some kind of scanner that picked up this initial movement right here, you're very seldomly going to get right at the bottom. So having said that, the confirmation here would have been fine because we had all this crazy volume coming in, and we had this line right here, which could have been set. Let me go ahead and move this way, which is right around the top of these candles right here. Now again, we're not talking about an exact science here. The reason being, is because we're going to have to ebb and flow with the EMAs. And as candles develop, the EMAs develop along with them, obviously, because they're moving averages. They're going to fluctuate up and down. So just because you get in at 840 with a 10-cent stop, that doesn't mean the EMA is going to stay at 30 cents the whole time. It may get down to 28, maybe move back up. So what you really want to have is your risk management, to where if you have to chase this on the way up, you know it's confirmed above the 20 and it just crossed the 9. We have that confirmation, and you want to make sure that when you do get into this, that you're going to be at a level, and again, this would have been a nice top to get in at. You want to make sure you're at a level where if it does pull back and you stop out, your risk management is going to keep you from really losing a lot of money. And that's the third biggest step of this trade, and also really any trade, is risk management. And I'm going to show you why that's one of the biggest things here in a second. Just because I did get stopped out before I got a winning trade on this, and it was because of my risk management. So those are really the biggest pillars in this trading strategy. Is you want to have a lot of momentum coming in on a stock that is around, moving up to the double digits, no less, no like $3 or $4 stocks like that. But you want to see a gap up, and then you want to see it kind of consolidate, which is what we had here after this time period, and then make one movement away or above the 20 EMA. The second one is you really don't want to get in an entry close to significant time frames because of the volatility and profit takers that can completely screw your setup. And the third is obviously risk management. Now let me jump up and show you the trade and actually go through my risk management trades on this and show you why I was able to stop out, and also make one good trade which more than made up for my stop out. Okay guys, here we are. Unfortunately, this stock ran up and left me in the dust. This thing moved up about $3 in pre-market, and if I could have got in at the levels that I was just showing you guys a bit earlier, I could have made a lot of money and hit my goals within the first 30 minutes of getting online today, and just close the whole thing down. But I really did want to practice, even though if I was hitting reds all day, I wanted to kind of see how this strategy shook out. And we're going to look here. So one of the big things, you're going to see my first short entry here. The main reason I did go short here instead of going long is because we had this main level right here, which was the $11 mark. That is a key level for me. Anytime I see whole dollars, that's going to be my stop loss. I want to get in short with the risk management to be able to let this run up and actually tap a whole dollar. Because as you can see here, this thing it actually did move over 11 several times, but it just couldn't hold. It pulled back under the 9, but it just didn't have the volume during that time to sustain any significant movement. It basically just went sideways. When this candle ripped up over the 9 and failed to hold 11, I said, okay, let me go ahead and take a short position here for this loss and see if we can't get this movement here. I was looking for a continuation and then a loss of the 20. What we did get is a bounce off of the 20 right here, and then we didn't get any continuation. It went right back up, and it looked like it was trying to break 11 again. The bulls said, no, we're going to give this one more shot. And yep, that's where my stop loss came in. I said, nah, I'm good with that. And I stopped out right there at that, probably at like 10.98. So that was a little more than probably about a 20-cent loss. Since this is a lower price stock, again, this is where your risk management comes in. You're not going to want to take 1,000 share size and stop out with a 20-cent loss. That's, $200. What you can do is you can take like a 300 share size or a 100 share size here, or if you're going long, take it long here off of the EMA, and then even add to it if you're going for a break. Or if it does continue to move down in the direction that we want it to from here, let's say it went up and then it bounced off of the EMA and started actually making the movement that we wanted, add to your position at the 20. But you want to keep your risk management to the point where if you stop out, you're not going to be down half of your daily loss limit. And I have done that before, trying to get cocky and load up the bus and trying to rip it home in one trade. I've done that several times. And thankfully, this was not one of those times. But so you guys see my risk management on that one. And we're going to move over here to my second trade of the pre-market on this stock, which was right here. Now, this was pretty much the same exact setup right here on this. It ran up and it failed to make the 11, close above 11, I should say. And as soon as we opened below the 9 EMA, I went ahead and took half. And it continued down, and this bad boy had some nice red volume on it. So I moved another half in. When I did that, I was able to hold my full position right around, let's see, the price on this one was sitting at, my average was going to be sitting around 10, yeah, it was 1082. That was my average from this morning. And that allowed me to have a stop loss, which was going to be right up here around this level here. Now, this wasn't quite $11 stop loss. I wasn't going to let it go back that far. And honestly, if I would have gotten stopped out on this trade, I would have probably given up on this stock because it was going so much sideways. I'd have just been like, nah, I'm good. Y'all can keep this one. But thankfully, this trade did move in my direction. It got stuck in between the 9 and the 20 here, and it did one more time. But as you guys can see, once it did lose the 20, which is the key level on this that you're looking for, we got a really big movement on this. And I started taking partials at around 1062, so that was a good 20-cent partial there. I took a couple shots here, and then I partialed again at 10.5. And then we saw it had a nice bounce right off of the 50 EMA, and one more quarter here. And this is going to be my stop loss. This is where I'm moving it down to. It doesn't matter if it bounces here or not. Once I see this and it looks like it's about to actually open at the EMAs, that's when I'm out. Now, I will give this stock a chance to hit the EMA and actually reject. Like, I'm not going to automatically stop like that. But if I see some positive momentum like this, and I see that it looks bullish going toward the EMA, not like a bunch of red dojis or anything, I'm going to go ahead and stop out and just close the rest of the position. So I am going to keep experimenting with this because, again, I'll reiterate this, I can only trade certain times. I do trade at the bell now, and I'm trying to get the ABCDs right after the bell, but I only have about 30 minutes after that. So I don't really have a lot of time, and this is my peak time to trade. So I want to get in and out in pre-market if possible. I'm going to keep honing in this strategy and sharing this information with you guys. Again, this is always just for educational purposes. I don't mean to drive you towards a certain strategy. But the key about this one is, since we're in pre-market, we don't really have a lot of indicators as far as patterns that are coming in that can be really reliable, like an ABCD or maybe a break of low day or something like that, because the volume is really just really inaccurate when it comes to somebody just may push in a 1 million share order trying to get in before the bell, and when that happens, you're going to see the price fluctuate so much you can't really trade off of it. So, you know, risk management, big gap, big volume, and also be sure to really have your share size and your price in a position to where if you were to stop out at a 20 cent on a stock like this, or, you know, the larger price stocks normally aren't going to go 40 and 50 cents that quick, so you can kind of adjust it there. Just keep that in mind. It is something to work with and experiment if you like trading pre-market. Thanks you guys as always for stopping by. Take care and stay green.